Ladies and gentlemen, thank you so much. Right, again, you may not have a question now, but again, as the day unfolds towards the end again, if you're curious, you'd like to know more, I'm sure Wolf will be more than happy to start a short conversation with you and see where that takes you both. Right, we're moving on now. So it's all about enabling and financing electric vehicle innovation, naturally in the Middle East, working out or making sense of really the best business models, the best way forward, the right decisions, the smartest decisions. And so through this discussion now on stage, hopefully that will help us make sense of those better decisions that we could be making from perspectives from people that understand and not saying they know best, but certainly distinguished panel that will be able to share with you their perspective to help you maybe rethink yours. Right, ladies and gentlemen, please welcome to the stage the man again, the moderator of this session right now, partner at Roland Berger from the UAE, Mr. Arvind CJ.
Good afternoon, everyone. Thanks for the warm welcome. I would like to now invite the panel members to come on the stage, and I'll have a quick round of introductions once we settle down. Please. Perfect. A very good-looking panel, including myself. So, just a quick round of introduction starting from Nasir. Nasir, the Managing Director of Sustainable Mobility in India. Goes beyond electric, more of smart mobility, including autonomous and shared transportation as well. So, any questions on those particular items, he's the guy to catch. And again, under his belt, he also has quite a few things like the ION mobility, also, let's say, having the first autonomous pilot in public roads, etc. So, Nasir, nice to have you on the panel.
Thank you.
Steve, the Director of Growth for Masdar City, already had a very short conversation outside. So, all guns blazing, a lot of questions towards Steve today. Again, Steve, let's say, looks into more of the smart city related areas and also looking at sustainable, let's say, solutions coming from an overall infrastructure perspective. Focuses on, let's say, electrification, autonomous, and also going beyond the value chain of just the vehicles that way. Thank you, Steve. Alexander, the Managing Director for Futtaim Finance, and also heads the Move with Hertz businesses within the Futtaim portfolio. A seasoned veteran in terms of, let's say, vehicle financing related parts, coming from, let's say, previously from Mercedes-Benz as well. And again, more from a consumer perspective, that's where we will have a lot of questions for Alexander as well. Jonathan from HSBC, looking at sustainable finance. Again, looking beyond just automotive related solutions in general about sustainable finance. So the focus for Jonathan again will be to provide all the answers which we need in terms of financing electrification. So let's try to make the best use of his participation as well. And last but not the least, Pablo, the Director of Corporate Innovation at Dhabi Ports. We do have an innovator in the midst of us who's, let's say, filed quite a few patents. And one of the interesting things which I also got to know about is that Pablo has a master's in blockchain technology. So we will try to have a spin around those particular technologies as well, coming in from a financing aspect, what could be the potential innovations that are out there. So quite an interesting panel we have over here, and a very good mix of experience as well. I would say more than 100 years of experience on the panel now. Doesn't make us look old, just that the panel is very strong. So with that, I would like to get into quickly the panel discussion. And maybe a note for the audience as well. We plan to have the whole conversation limited to around 25 to 30 minutes. And then towards the end of the session for around 10 minutes or so, we will invite questions from the audience. There are mics in the center of the hall, so you can use that for any questions which you might have. Now, looking at getting into setting the stage, also to discuss a bit more in general about, let's say, the overall electrification or the transition to electric vehicles in UAE and let's say what has worked well so far? Maybe Alexander, to you in terms of this particular question, how are you seeing this particular transition in UAE? What has really worked well and what is your view in terms of where we are headed towards? Alexander?
Oh, okay. It's difficult to hear, sorry. So far, what really worked well on the start of a very long journey, we take the first two steps, right? What worked well is the increasing availability of different brands in the region here. So that we, from an Arvind in finance and Move and Hertz perspective, we want to make the access to electric mobility affordable, convenient, and risk-free, right? So we're seeing more and more options. So that is a step in the right direction. That is something we work on right now. But also partnering with big brands in the region here, but also being part of, for example, the Hertz network. Hertz is the biggest electric vehicle operator, one of the biggest in the US. Of course, there's lots of learnings we take from those more developed markets and adapt it here. By saying that, it is very early stages here, right? There's a lot of work to be done, which was mentioned in previous panels here, around residual value setting and understanding the market, creating a market for used vehicles, understanding how, what's the future value of these vehicles, etc. So we're at the very beginning, but the first 2-3 steps are very promising. And what's even more promising for us is that we get customer inquiries around electric vehicles now. That is on everyone's forefront, and we're creating the products today for our future setup. Right now, maybe 3 to 4% of my rental and subscription fleets are electric. This will change. Maybe we'll see that by the end of next year being 25%. And we need to set this up now in order to have the right mobility offerings and the right finance options and the right convenience and affordability products available for our customers.
Thank you, Alexander. Maybe the same question towards Nasir as well in terms of what's worked well, how are we seeing this particular transition with the UAE?
I'll look at the Middle East as a whole first. It has shown significant progress in adoption of EVs. The UAE and the whole region have put a lot of, or have been pursuing a lot of initiatives to promote electric mobility. Specifically, the UAE, I think the announcement came yesterday by the Minister of His Excellency, Mr. Suhail Masrouri. He announced that the total electric vehicles registered in the UAE is 1% of the total amount of vehicles sold. And that's I mean, it could be low, it could be a good sign, but there are other challenges as well. According to a report by a consultancy firm, Arthur D. Little, UAE is ranked 8th when it comes to market readiness for electric mobility, and also classified as an emerging EV market. Just sitting below a few points below the countries, manufacturing countries such as Japan and Germany.
Thank you. And maybe staying on the topic in terms of what's happening in the Middle East and UAE in general. Steve, so looking beyond just the vehicle side of things, right? So again, when we talk about electric vehicles, we are talking about sustainable transportation. So it has to go beyond the vehicle-related front. So where do you see the recent developments? How well have they happened? Are we ready towards this particular transition?
Well, I think, and I think despite being generally positive, Nasir, you also laid out it's about 1% of vehicle sales are electric. I don't think we can jump up and down and say, oh, we're doing great. But outside of Norway, if you're not Norwegian, your country's not doing great at electric vehicle adoption. This is not a UAE problem, this is a global issue. And the countries that have done better both have a significant regulatory requirement and often very high tax incentives to do that. And that is generally only Norway and a couple of the Scandinavian countries that are still well behind. And so what I would say is, if I take the renewable energy model and say, and particularly at Masdar, that 15 years ago they put a stake, when Abu Dhabi put a stake in the ground and said, we're going to do 10 megawatts. It was not economic in any way. It was some of the most expensive energy on earth. But now you've seen the grid significantly change. Both Abu Dhabi and Dubai have invested heavily in renewable energy and solar, and it's made a lot of sense. And we've turned renewable energy from the world's most expensive energy to the world's cheapest. And that's part has been a big part of that journey in setting world record pricing. But you're going to need the same sort of concerted effort from the government regulators. And in some ways, the government fleets are large and significant. They're just going to have to put a stake in the ground and go for it. You're going to have regulatory changes to make it easy to have at-home charging, not just public charging, but easy at-home charging. And then we're going to need the OEMs to step up. I mean, if you look outside there, let's be honest with how many of those vehicles are actually for sale in the UAE right now. I mean, right now the market's about 95% Tesla, give or take a couple percent. There, if we were in a European market, we have a lot more options right now. So we need all the manufacturers out there, all the local dealerships and manufacturers to say we are committed to providing an electric option, and particularly more affordable electric options. So a lot of those have come out in the market globally. Even the Tesla has I think what is a very fair price on the Model 3. But we need more options. So we need a full effort around this in the way that we've had this around the renewable energy in the UAE. We can do the same thing.
Yeah, absolutely. And I think just walking outside, we already see the number of car models which are going to become available or already available. So
They're going to become available. We need to push the dealers to say, make them available. Make them available, and we're looking at some of the big names that aren't actually here at this show yet. So we've got work to do pretty much on every front, but we can do it.
Thanks, Steve. So looking at, let's say, the availability of models, and like you mentioned, so there's a lot of developments which have happened in the last few years, meaning electric transition, what was perceived as risky, or let's say there was a bit of lack of clarity in terms of which technology people are going to move towards. Now it's becoming, I wouldn't say mainstream, but at least there is a path towards it becoming mainstream. Now coming back to the main topic over here in terms of the financing side of things. Again, question, but more from, let's say, the financing side of things. How has, let's say, the financing options or the products in the market progressed? And what is that which is happening to kind of address this particular requirement?
Sure. I mean, if you look at what all the banks are doing now, they're looking at the whole value chain of the whole decarbonisation of the automotive sector. So it's massive investment in EV manufacturing, battery manufacturing, widespread infrastructure and charging networks being built, and as well as helping influence and guide government policy. And that's what we need as an industry to sort of make this all happen. The way banks are approaching it is sort of on two sides. They've created demand for themselves, where a lot of banks, a lot of international banks have set quite ambitious targets for sustainable finance. So HSBC has the 750 billion to 1 trillion target, which is quite a lot when you think about it. We've already financed 210 billion globally so far. And in the Middle East, we did 3 billion last year. And all of the banks, big international banks, local banks are starting, they're doing the same. But they've created demand for that, so there's appetite for investment in this sort of technologies. On the flip side, they also have created a bit of a rug for their back through the financed emissions, because they want to make sure that this happens, so they're trying to reduce their exposure, which means investment should flow towards this sort of technology, electrification. Electrification is the easiest way to decarbonise. At HSBC, we want to reduce our exposure by 65% by 2030 in the automotive sector alone. But that means access to capital is going to become a lot easier for this sort of technologies versus traditional non-transitioning companies. We've created a demand for that in our own demand. There is a little bit of challenge where we're trying to make sure that the investment in early stage technology is credible. We have our own credit risk appetites that we need to work on, like any bank. We need to make sure that that happens. In terms of the market, I mean, it's all about sort of penetration and demand, make that scale really happen. If you look at Europe, I think it's only at 15%, and sort of there's been some pushback from regulators on banning sort of combustion engines. On the flip side, you can look at China and the forecast of 90, maybe 99% by 2030. The UAE is right at the precipice. You know, it's at 1% now. Will it end up at the 90, or will it be a laggard? And I think the government and the finance is going to be key on that, on how it flows.
Perfect. And I'll come back to the, let's say, tying up what Alexander said and Jonathan you mentioned. So let me get back on that particular point. But before that, maybe a question to Pablo. Again, looking at the innovation side of things, right? So beyond vehicles, beyond infrastructure, and all of these things. So what, let's say, advantages does UAE have being able to participate in, let's say, development of its value chain as well?
A very, very interesting question. One of the things I like about UAE is that they have a very strong vision about the future. And we learned over the years that a mandate from the government and funding, it's really not enough to make an industry successful or to scale. So what's really needed is to build the ecosystem. That's the secret. To build the ecosystem for an industry to flourish. And UAE has the possibility because it has a strong vision from the leadership. Regulation is starting to be there, you know, schemes like ECAS, the regulations as ESMA and others are putting the framework for that. Infrastructure, yeah. So we all know that UAE is very strong in the vision for smart cities. And for me, infrastructure of smart cities is the backbone to allow e-mobility to develop. Yeah, so that's something that sometimes we don't think about it, but the interface between the smart city and the e-mobility through that backbone of infrastructure. Then also manufacturing. We are starting to see companies coming from all over the world, establishing in the region, in the free zones, in friendly places to develop their businesses. Yeah? So this is what UAE is helping with in startups, for example. Yeah? I met a startup, an Indian startup, a few months ago. They were developing a kit to transform any electric vehicle into with the capability to have inductive charging just with a conversion kit. Yeah? So this is the kind of innovations and startups we are starting to see. Another element, education. Education for me is fundamental. And just now, I mean, here outside the hall, you see this challenge for high school and university students building electric cars. Though universities like Masdar and Khalifa University, they've been doing this for years in this electric vehicle competition. Yeah? Now, what I haven't seen yet in the UAE is like a strong academic emphasis on e-mobility or e-vehicles. Of course, we have electrical engineering and mechanical engineering as foundations, but not specific courses yet. However, in vocational part, you know, you already have institutes and academies in UAE offering technicians courses on batteries, on the different parts of the car. Finally, just 2 seconds. I think the UAE has the opportunity to be a test bed for this region of the world and collect data like it has been done for smart cities in other parts of the world, like in Manchester and other places, and provide cities and countries in the region that want to develop in the future all this data. So we have like a privileged situation in the UAE.
Perfect. Thank you, Pablo. And going back to the conversation which we were having with Jonathan on the financing side of things. So, Alexander, given that in terms of rental, subscription, so you come face to face with the consumer on a daily basis. In terms of, let's say, having specific, let's say, instruments, like financial instruments for electric vehicle transition, are there any gaps or any, let's say, new kind of models which need to be adopted to be able to push that transition further, more from, let's say, the private sector perspective? It's not just the, let's say, public level.
Definitely, we need to look at from three perspectives. One, from a customer perspective, how can we roll in? We talk about finance. In reality, we talk about mobility offerings, right? How can we roll in what's on offer in this infrastructure? How can we combine it with the smart city? How can we create a payment system which is easy and convenient? So there's a lot of innovation being done there with new technology partners of legacy players like us, but also with new entrants, right? And then the understanding of the asset from our perspective as fleet managers, we need to understand the asset is very different from an ICE vehicle. Usability is different, the availability is different, the residual value setting is different. What is this car worth in 5 to 8 to 10 years? We throw basically the entire rule book out of the classic leasing business. And the third enabler is to look at the available funding infrastructure for those fleets, which will be built up in addition, because we see more and more consumers not wanting to buy. And if the consumers don't buy, and you create a mobility service around that, then you need someone with a balance sheet. And I think specifically in the Middle East region, I think we should transition and provide more funding models, EV and specific funding models from the capital markets, from the banks to those fleets and new players, in order really to drive the adoption. Because right now, we're talking small scale. If we want to accelerate the adoption, we create a lot of big portfolios which need refinancing and which are probably structured in an interesting way, a good investment for the capital markets. And I think, at least in this region, we're not there yet, and that would be a massive enabler. And again, the third part of innovation I would look out for in this market.
Just to jump on, absolutely right. The way that banks, the way that you get a car loan for an EV needs to be completely revolutionary. That's the way we finance any of this clean decarbonisation technology. The credit, the risk models that everyone's using needs to adjust, and that's what we talk about. The whole financial system is also going through a whole rewiring, and just like the mobility section is as well. So it's going hand in hand, and it is taking time. Imagine changing anything in the way the multilateral development banks aim. It's going to be a slow process, but it's happening.
Perfect. And extending that question to Nasir as well, given that, let's say, again, looking at the, let's say, the overall group phobia, you have certain capital fleet as well, which is not exactly consumer focused, but more from, let's say, as a business, you need to have certain electrification part. Do you see, let's say, the financing or, let's say, the funding related options, let's say, evolving on that particular front?
Financing, if for us, the way, at least to our vision, financing is never an issue for us, whether it's a green loan or, you can call it, these are like these fancy names, banks, they like to use it, sorry. I think the challenge to transition is not the financing element, it's mainly the options availability. I look, for example, here we have a supermarket of vehicles, like different portfolio of vehicles, from heavy to light duty vehicles to pickups, delivery vans. These options are not available yet. Even if they are available, their prices are up the roof. Manufacturers or retailers need to support this transition. For example, I look at one of the manufacturers who recently introduced an electric van, for this region. But you know, when you compare it with its, when you do an apple-to-apple comparison, you know, I'd rather stay with a diesel or petrol, you know, powered vehicle, you know, because of the price difference. And then add on top of that, looking at the nature of the operation, you know, these vehicles are commercial vehicles, they need to be on the road 24 hours of the time. You know, infrastructure around those do not support. You know, you would need to work your, you know, whole operational model to suit that, and you know, and then ultimately it doesn't become viable for you to run those. It's a collective effort. It comes from you know, policymakers to, you know, retailers to operators. They all have to come hand in hand, you know, to make this transition happen.
Absolutely. And given that, let's say, one of the key challenges for a consumer is also things around range anxiety and so on, right? Like and they don't see charging stations across, let's say, the country, then they do have, let's say, certain challenges in perceiving, okay, what if I have to drive all the way to, you know, the southern part of Dhabi, will I have a charger over there, kind of a thing. So from that particular perspective, maybe Steve, you could maybe comment on this. So what is that the individual municipalities or let's say these smaller city level policymakers need to do to kind of drive that particular transition?
Well, obviously, I think you've had two different approaches from Dubai and Abu Dhabi, but I think even the Northern Emirates seem to be included here. Abu Dhabi is a little more open in terms of allowing people to charge. Dubai has been a little more forward in terms of DEWA putting in charging stations, but no one else besides DEWA is allowed to have a chargeable charging station. So some of the malls do, but I think if we're going to get that adoption, you need both the public charging stations, but you need to make it a lot easier for people to have private charging stations. And that means the towers, and that means a smarter grid, that means investment in the grid. But Norway's at 50%. And no one says, wow, Norway had so many grid problems. We can bring in so many more electric vehicles before you have a grid problem right now. We have a significant amount because of the focus on safety, on the transition and stability of the grid. We have a significant amount of power to the grid that we could use, especially at night, to be charging the electric vehicles with the current infrastructure. I'd also say that the banks, you know, I'll call out the banks a little bit too. I've been an HSBC customer for 14 years, so I can call you out on stage, right?
Yes,
right. You've made that transition around renewable energy already, and you've made it in this region. It is now exceptionally easy to finance a solar project, a wind project in this region. As safe as any other power project. It's safe for widows and orphans. The rates are exceptionally affordable. When we went out and looked at Green REIT, we got spectacular rates on financing our real estate and it was especially attractive to the banks because we were putting together very highly sustainable, largest collection of LEED Platinum buildings on Earth, and easy to get great finance, easy to get great rates. But the vehicle, and Masdar City has always run full electric. From day one, even when those cars were not an attractive offering to drive, but we made that investment. We said we need to be a leader here. When we went to buy it, and I will say Nasir operates quite a few of our fleets. He's a big support here. But we went to get Chevy Bolts, which is a really nice car to drive. In the U.S., you can lease that for about $500 a month. And that includes federal tax credits. It's not 100% banks. But in U.S. dollars, they're asking $1,100 a month here. More than double for a Chevy Bolt. At $500 a month, that's less than the price of leasing, you know, a Corolla here. And it's an exceptionally attractive pricing, and there are tax credits that go with that. But also the banks and the OEMs are a lot more aggressive about providing that financing. Somehow they make money doing it. So it's between the OEMs, the dealers, and the banks. There is, to get down to pricing, somewhere near where we are in the rest of the world. And they've done it with every other sustainable offering, whether that's renewable energy, sustainable buildings, and other technologies. we need to push you guys on the fleet a little bit, on vehicles as well too.
Fair enough, I'll take that one.
Perfect. And maybe an open question to everyone, right? So if we look at, let's say, we've spoken about tax breaks for the consumer and, you know, the certain ways to push the transition more from a consumer perspective. What could be the mechanisms, again, I'm just throwing it out there, things like carbon credit kind of things which could be there. Again, maybe it's not established in every country or every geography, but are there any such levers where you find a way to incentivize, not directly, but more in terms of, let's say, usage? So the more electric vehicle miles you drive, so it does not mean that you have to own the vehicle, even if you lease or even you take a Kareem, for example, you still get some kind of a credit mechanism. So are there any of these being discussed or thought of at this particular stage?
We see this more on the, not so much on the driver-owner side, but more on the infrastructure side. So incentives to invest in infrastructure and opening up the monopolies here regarding payment systems for charging. They will massively accelerate the EV adoption. That's something we see. That's something we hear from all our fleet inquiries. That's something we hear from private individuals. That is the major challenge to overcome. And any incentivization in that area for new developments for existing house owners or apartment building owners, locations like supermarkets and malls is very welcome. And then overlaying that, a simple infrastructure for payment and monetization from on the other side. We invest heavily in charging systems ourselves, and Futtaim has a big footprint, and if you just imagine you roll this out on this footprint alone, you have a massive increase in convenience for charging.
Absolutely. And maybe extending that discussion a bit further, maybe for Pablo. Again, when you look at payment systems, payment mechanisms and so on, given your blockchain background as well, what kind of innovations do we expect to happen in this particular area?
Yeah, I mean, let me put the broader question. Yeah, if I put, first of all, we have to see any technology nowadays as a confluence of all emerging technologies, right? So AI, blockchain, automation, robotics, all these technologies are influencing, accelerating all the industries, and EV is not an exception. Yeah? So if I put my innovation hat on, and I think, I mean, in the next 20, 30 years, things that we would see as normal, let's say, I can imagine, for example, driving a self-driving car from Abu Dhabi to Dubai, or commuting through a inductive charging lane. Yeah? So I don't have to stop for charge. I just go in a lane that it has an inductive charge unit below it, and then via RFID or IoT, my car is identified, and via centralized finance, it gets deducted. You know, how much power I consumed or I charged my batteries is deducted. Yeah? So that's one use case. If I want to go a bit more futuristic, and this is something that is coming in some legislation already in some states in US, in the blockchain world, there's something called DAO, Decentralized Autonomous Organization. Yeah? So it's pretty much like a very light company or structure of company where you have stakeholders or voting members, and basically a smart contract or a series of smart contracts, imagine, could own a series of charging stations in UAE. Right, and they pay they collect money for the charging, and they also can maintain themselves. They send fees for municipality. If there's something broken, they can hire a company to come and do this all in a smart contract environment. And then also the stakeholders or members of this DAO, they can get a monthly revenue of the profits of all this network, and plus they have voting power to extend this network. Then finally, my final glimpse into the future, I think for autonomous vehicles in the future, they will be, of course, autonomous, but there will be like a centralized AI traffic management system. So there will be a protocol where all the autonomous brands and cars will delegate authority to this centralized traffic system, and we will have at that time accidents zero or almost zero.
Yeah.
So this is some glimpse into the future.
I should say the future looks good or better. Gentlemen, thank you for these insightful points. And again, for the audience, so we will now open for any questions which you might have. Yes, please. I think we have a couple already. Yes, now we can hear you.
Can you hear me now? Perfect. Two parts to the question. Regarding Stephen, who mentioned about the difference in price between a vehicle that was in the US and one in the UAE, and the price differentiation between the two. Was that predominantly down to residual values and the ability to be able to guarantee good residual values in terms of the used car market? And the second part of the question to Alexander, I don't know if this might cause an argument between you and Jonathan from HSBC, but given the fact that sometimes in European countries you have leasing operations, you have banks that predominantly have a leasing arm or that just purely operate a leasing arm, and that doesn't seem to happen as much over here. So there are some dealers that will then start to potentially provide the finance themselves. Now, I don't know if that's actually happening already in this market. Is that something that you see as a possibility where you're actually providing financial support for the vehicle as well, and then also looking after the residual values? Thank you.
Well, I would say it's one of them. I think I'll go. There's 4 reasons why I think they're more expensive. A is federal tax credit. That's a part of it. B is what you talked about with dealers provide, with both the OEMs and dealers being involved directly in leasing, so they have a direct incentive to make that. So that's 2 there, the dealers. So there's more competition in the leasing market. And finally, it's that residual value. When we went to lease vehicles, because we don't like to own fleets either, you're looking at lease companies outside of, say, either the OEMs or the dealers who want to amortize that over the full car, over the lease period. So they are very conservative about residual values, and so that does. So those 4 things together, I think, great lease. And I would say a bit of a, at all points, there's less competition here than there are, and the OEMs are not as incented to. Even if you look at just sticker price, OEM to OEM, you're looking at different sticker prices here.
Yeah, true. I can echo what you're saying on residual value. This market here and the participants in the markets, like for example us, we don't have the similar experience as we have with ICE vehicles, for example, in selling residual values. There is no real functioning used car BEV market, right? There's no data to really fall back on other than from European markets. And we see, I think we will see a lot of progress here with the entrance of new players at a different price point, and also with participants in the leasing and mobility game who understand more and more the residual value of electric vehicles. So I think we've got those first couple of steps I mentioned earlier. These are the hardest ones, and we'll see this improving a lot, I think, in the next years or on shorter terms. The second part of the question, yes, this market is predominantly legacy-wise a broker market. So the OEMs and dealers provide access to the markets, like to the banks like HSBC and others, to write the retail finance paper. With the strategy of most of the car companies right now and the players here is to divide the credit risk exposure on the one hand and the control over the assets, meaning understanding the life cycle value of this asset on the other hand. And everyone in the auto industry, be it in this market or another market, should have a vital interest to manage and to build a market for that asset throughout every stage of the life cycle. So I think the short answer is yes, we will see OEMs and big dealer groups here taking more and more control and responsibility of that, and meaning playing a bigger role in the lease market themselves. That's definitely something we will see. We don't have a situation here that we have big players, big bank players like in Spain or all of Europe, France, for example, where big banks have big leasing arms. That's not the norm here, it's rather the exception. So yes, we will see that, but the whole mobility space, the classic leasing model will be probably obsolete in 5 to 10 years because we're looking at much more flexible mobility solutions. But the mechanics on residual value and balance sheet, they stay the same. We have to commoditize this product and offer it in a convenient and risk-free and affordable way.
And just to add, I don't think it would start a fight. I mean, we're a big trade bank, so we do a lot of the importing and the letters of credit and things like that. So we're helping facilitate the market. If it's leasing or it's buying, we're happy to support. We just want to see the market developing, which is good.
Perfect. We have 30 seconds or so, maybe one very quick question. Yes,
Good afternoon. My name is Gabriel Grosso, company Resco. I have a question for Mr. Case. Can you please approximately offer us the info? What is the percentage of financing sustainable projects of HSBC, vice versa other industries, and eventually what are the challenges? Thank you.
I don't know the exact percentage. So as I mentioned, we did $3 billion last year of sustainable finance deals, not just in the automotive, but across sector. And in terms of percentage or ratio, what we need to see is that the ratio of sort of clean technology versus fossil fuel is moving away from a 1-to-1, which is it's about 1 to 1.7 right now, but it needs to move to 4-to-1 to 6-to-1 and ultimately to 10-to-1. So the financing is going to happen. It needs to ramp up massively. But yeah, I don't have the exact percentage of what the ratio is, but I know we did $3 billion last year in sustainable finance in the Middle East.
Thank you.
Perfect. Gentlemen, thank you so much for the discussions. And the audience was also quite interested with quite a bit of questions. So as people are walking out, you can just grab them and have more questions with everyone. So thank you so much for the session and pleasure. Thank you.
Ladies and gentlemen, that's the end of the floor. And our moderators as well, thank you so much. Wonderful.